Today we are meeting for this session that talks about increased efficiency in trade finance due to digitization and emerging technologies like blockchain, AI, and IoT. And the major focus of the topic today would be how technology in trade finance is helping medium to small size businesses gain lending to increase their business, improve financial opportunities that typically large enterprises are having. So today on the panel, we have a very esteemed panel. So I'll spell out the name and then the panelists themselves can introduce them. So first, Mr. Akshay Bhardwaj, if you can say a few words about yourself.
So I'm part of leading the practice of trade credit, political risk, structured finance and surety for Marsh, India. We are by far the largest producer of business for all the major insurers, like globally as well as India. And I personally have been an underwriter and now being a broker. So that gives me a slightly comprehensive edge. With about 1,500 plus claims in a very small market like India, I think that's quite a lot I have seen.
Right. Next we have is Mr. Sumeet Tank from Dubai Vigilance Group. Yes, Sumit, we are not able to hear you.
Are you able to hear me now?
Yeah.
My name is Sumeet Tank. I am the Chief Finance and Investment Officer for Dubai Vigilance Group. I am actually a blockchain enthusiast and a disruptive technology enthusiast. And I am also a startup promoter. So work with blockchain, work with technology, finance, logistics, and several other things. My contribution would be more in that area today. Thank you.
Yep. And then we have Ms. Chantal Joosse. Am I pronouncing the name correctly?
Yes, perfect. Thank you very much. In the Netherlands, you would say Joosse, but it's very fine. Thank you. So my name is Chantal Joosse. I'm responsible for the strategic partnerships within STEN International. I'm working out of the Netherlands. STEN is a non-bank financier providing digital working capital solutions for companies worldwide. And we do that in almost 80 countries.
Great. Then we have Mr. Pramit Joshi.
Hi, thanks, Ravi. I am founder of New-Fi. New-Fi is one of its kind EXIM SaaS company. So we enable a lot of SMEs on the digitization path for managing their exports, imports, workflow, including a lot of services that go into an EXIM transaction. Being a banker, was with Citibank before New-Fi, being into banking, finance, and technology for over a decade. We are a Singapore-based entity operating in India, Southeast Asia. And we work with quite a lot of financiers, including STEN Capital, for enabling refinancing, financing of trade finance receivables.
Right. And then last panelist we have is Mr. Aditya Menon. He comes with, again, a very rich experience. Over to you, sir.
Hello all. Thanks for having me here. I've been a serial entrepreneur in the trade finance platform space, having 2 successful exits to ACI and SunGuard. I spent 7 years driving digital transformation for Citi at the top of the house prior to founding Talix, where we created the world's first trade tokenization platform. So what we've done is asset tokenization, tokenization of assets, which are not cryptocurrencies, but essentially represents the underlying goods or services being traded. And this could extend to goods, services, even commodities. And I'm going to talk hopefully a little bit about that later. But at the end of the game, we're about changing, the way business is done, and by creating opportunities to unlock really the bottom of the pyramid, which is the SME sector.
Thank you. So now I think we can start the discussion. So as I mentioned, the topic for today is focusing on SME segment, and most of the discussion will be around how trade finance is affected whether it be post-COVID era, whether it be digitization, whether it be new emerging technologies like AI and blockchain, how it has been impacting and helping MSME to get better finance. So first, I would like to invite Sumeet to talk about how do you see emerging technologies helping the MSME segment, especially pertaining to trade finance.
Okay, thank you, Ravi. Let me just talk about an incident that happened a few days back, and I'm sure all of you would have similar stories to tell. So, just a simple transfer of money, cross-border payment from my account to somebody else. It took 22 days for this money to arrive finally after it being returned back to my account. The bank was unable to, at some point of time, tell me how many days it would take for them to bring back the money to my account. Now, in today's time, when you have got IoT sensors that are available for less than $1, your washing machine and refrigerators can talk to each other. Banks still need two intermediaries in between to be able to send one payment from one country to another country. This is something that is perplexing and needs to be rectified. And financing for the MSME segment, the micro, small, and medium enterprise segment, is all about this. It's like, how soon can you get money converted from raw material to final cash so that it can once again be deployed? So capital efficiency, that is what we have to talk about. Blockchain, artificial intelligence, RPA, the robotic process automation, there are several technologies that are available to be able to do that. And there are problems, there are barriers, there are issues, but there are companies that are working to eliminate this. One of the biggest examples today in this era that I would talk about is the JP Morgan's project called Link. Now, it used to be earlier called IIN, International Information Network, which is actually a network of 400 plus banks in 78 countries. 25 of the biggest world banks are part of this network. So this project has been formed more to facilitate cross-border payments, how to make it more easy, how to make it faster. A cross-border payment is 3 days today, minimum. But with Link kind of innovation that can bring huge turnaround in the financing industry, banking industry, it would make it almost instantaneous, if not a few hours. So what we have in India, that you can do an NEFT and within 3 hours, the beneficiary gets the money, you may be able to get this very soon on an international scale, cross-border payments. So yes, of course, every company needs this, but in my opinion, MSME segment companies need this more than anybody else. So these are the ways in which I believe the new technologies will be able to help the micro and small and medium enterprises to get huge benefits and help with their finances. Not only from what the banks are able to do, but what they can do in terms of converting their raw materials into cash and plowing it back into the business, which will increase their capital efficiency.
Right. Yeah. So I think Sumit has given a very valid point as far as remittances are concerned, which again is one of the major pressing concern among all businesses, not just MSME, but whether it be enterprises, whether it be startups or consultants. It's definitely a very big pressing problem. Now I would like to ask Chantal to talk about what are the challenges which are being faced by MSME as far as procurement of capital or lending is concerned.
Right. Yeah, let me first say that this market, this SME market, is really important for global economy. So it plays an enormous role in exports. almost half of all the exports, for example, in India, is done by this sector. So it's really sad to see that this COVID pandemic is affecting these segments enormously. So that's the general situation. And then you're asking me about challenges to get access to financing. It's fundamental for these companies to get access to the financing markets, to exist, to also exist post-COVID, but also to grow, to manufacture again, to service their clients in other markets that are asking for extended payment terms. So it's crucial. And that's why it's really sad to see that there are so many challenges for this market to enter into the financing market, to get a proper lending. When I speak to companies in this segment, most challenges that they are facing is that traditional bankers, traditional lending market is always looking at the size of the company and of the health, the financial health of the company. And we're talking now about suppliers. So if you are a startup, it's almost impossible to get access to financing nowadays. Or if you're a very small supplier in India, for example, exporting to Europe or to the US, it's really difficult because you're not as big as the bank wants you to be. So that's extremely challenging. On top of that, the banks are very much regulated. So even if they want to service this segment or they want to service in certain industries, it's very difficult for them because of the regulations. And this is a problem we mainly see in emerging markets. Smaller suppliers in India, but also in Vietnam, Bangladesh, Africa, having a lot of difficulties to get financing for their exports. So I think those are the main challenges that these companies are seeing. And then, as I mentioned, you also have COVID, which makes it even more difficult. We see a lot of banks pulling back in commodities, but also in other industries, or in specific markets, specific countries. So we're talking today also about technology, but that will play a major role in overcoming these challenges, because all financial institutions are looking at financials of companies worldwide. And we normally look at these financials of, let's say, 12 months old or even older, or we focus on credit rating agencies, how they rate companies. Well, post-COVID, that's really, really difficult to do. Because what happened in 2019 is not important anymore. We have to look at how they were dealing through COVID, and how they will, what their financial strength will be after COVID. So technology, and I think we will talk about it later today, will play a crucial role in overcoming all the challenges of this segment.
Right. So I would like to, so I think a very valid point, and especially talking about some of the major challenges which MSME are facing as far as procuring. And I think post-COVID, people have realized that digitization is the way to go. And digitization, not in terms of, patchy digitization or in parts or partial mind share, but a complete automation or complete digitization of an end-to-end process. That's actually going to help. And we have seen this in normal products like retail products, etc. But when we talk about trade finance, etc., I think still it's a long way to go. So I would like to ask Akshay to talk a bit about, what do you see are some of the recent developments in the MSME segment, and what role digitization is playing pertaining to some of the emerging tech in the MSME segment?
Yeah, see, basically we have about 630 odd million MSMEs in India, and there have been even in the COVID period there have been a decent growth of about 18.5%. But the challenge is what MSME have, and I think Sumeet and Chantal presented it pretty well, how I look at it is that there was a KPMG survey recently done which says that even today about 60% of Indian MSME do not utilize stable internet and have not capitalized on the power of internet. I think that's a very important point because that is where the core is. And second is to complement what Shital said, that even today about 60% of trade finance proposals get rejected. And the reason is that if you look at a bank per se, the challenge for a bank is they still have a conventional way of looking at a proposal wherein they would be looking at cost of fund, cost of risk, and documentation. Now, what big data and technology can do, and documentation, when I say, means KYC, trade documentation, quality of document, avoiding a fraud type of a situation coming from an insurance background is something which I can speak about. So even today, when a FI has cheap fund and they are aware that they can have good margins at the bottom of the pyramid, the cost of risk and the documentation is their pet peeve. So what big data and blockchain intends to achieve is to cut this lag of documentation and reduce cost of risk. I think that would be a quantum jump and a big disruptor in trade finance. And I think we, like, for example, Trade Reboot and everybody today, even if we talk about Government of India or other governments, is this is where they are focusing on. Uh, so that's what I think. I think this is where big data and blockchain will make a completely transformational sense to trade finance, and that too specifically to MSME.
I think very well put, Akshay. So, as far as AI and blockchain are concerned, you're right. As far as documentation is concerned, I think that was the first point which most of the startups operating, blockchain startups operating in this domain actually targeted. And some of the governments are also now trying to participate in some of the blockchain consortiums. Because until unless, whether it be a blockchain-based ledger, whether it be a traditional ledger, until unless the source of document or the input documents or input data itself is not coming from a credible source, the overall value of digitization does not make any sense.
Makes sense, correct.
So what blockchain adds to the digitization of documents is that once it has been digitized and the source has been identified and is credible, post that traceability of that document becomes
Very
uh,
easy.
much easier from
Yeah.
blockchain rather than traditional technologies. So yeah, so now we'll talk. We'll like to hear some inputs from Pramit, especially from a COVID perspective. What do you see? Whether digitization is increasing in the trade finance segment, whether we talk about cross-border trade. So what do you think? How COVID has affected the overall scenario?
So obviously, it has been a real event for most of these SMEs at times, questioning their survival. But there is a silver lining there. What we have seen on the ground. So Akshay, that's a very relevant statistic. What you said, that 60% of them had difficulty in accessing internet. If you talk about the SMEs, but one blessing that actually helped a lot of SMEs and individuals also is the smartphone penetration in India, right? So after 2015-16, that in a way is nearly 100%. I can tell you, we work at grassroots at SMEs, and what we are fixing for is, while there are extremely sophisticated technologies accessible to larger institutions, which is banks or larger corporates, most of the high-end technology is available there. And if you look at the other end of the spectrum, which is the MSMEs, even the basic rails are not in place, right? You don't
Yeah.
have any plumbing available there to actually go and put in your big data and AI and any other sophisticated solution. So what needs to be enabled, and what we're working for in a way, is just give them a very basic digital solution to get them going, which is now COVID in a way has clearly been a catalyst when an SME realizes that even though my home and office is in the same town, I will not be able to make it to office. And that is, an awakening of a moment where they are looking for digital solutions to manage their business. And especially when it comes to exports and imports, the plethora of documents, the complicated workflow, multiple moving parts, and exceptions that hit for every transaction, right? So all of this, digitization is a natural solution. And once you have these guys on the rail, right, it's like you have an electric car, but you don't have a plug point to plug it in, you will not help the environment. In the same way, now that awareness and awakening on the SME side is there, that yes, they need to look at digitization, and that I think is an inflection point, that once these guys with that clear education awareness, if you give them the right, easy to use, cost effective solutions, you can aggregate them with technology, and then all of this in the background can work as a beautiful integration, where ultimately the idea is what banks have not been able to achieve is something that you can then aggregate, tokenize, break it up, slice, dice, and bring
You
it
can do anything. Correct.
trustworthy, transparency, asset financing for these guys, right? Just one statistic which Sumit was mentioning on the micro side, a macro statistic, that today we have $15 trillion plus worth of assets at negative yield. And on the other spectrum, you have a large number of SMEs who are not able to avail financing, even though they are ready to pay high double-digit cost. So, that's the disconnect where technology and digitization needs to play a role. And COVID, in a way, in hindsight, it will be a catalyst if you look at it 3-4 years down the line.
No, absolutely. I think that's a very valid point. So if you break this, so one, there were a lot of technologies which were already available, whether on the web or as part of a mobile app. I think due to COVID, people started realizing how to leverage them. I remember one of my relative, this is almost like 3-4 years back. He has an account with a very reputed bank, a very tech savvy bank, but still, he's not been using net banking just because of fear, because still people have a lot of fear related to security, privacy, and so on and so forth. And so you're right. So this kind of event has been a big catalyst to change the mindset of such people, that they have to rely on technology. Yes, the safeguards need to be there, risk needs to be controlled, but there are ways and people are doing it. And at the same time, there are a lot of startups who have leveraged this scenario to bring in more services. So whether we talk about some of the startups in the accounting space, whether startups in the finance space, lots and lots of startups have come up, which again are helping MSME individuals and small businesses to leverage technology to do all those things that they typically were doing offline or in a physical form. So now we'll talk to Aditya. Aditya, I think, has come up with a startup which pretty much does the same thing. Targeting the supply chain finance and trade finance segment using blockchain and AI. So we would love to hear how tokenization of asset, especially the receivables as an asset, how that is being done, and some words about how this is impacting, or what kind of traction you have got, and how the impact has been so far.
Sure. Thanks, Ravi. The first issue is to look at the extent of the problem, right? So today, if you look at the WTO stats, goods 19 trillion, contracting at about 7 to 8% because of COVID. Okay. You've got services 5.8 trillion, still expanding despite COVID at a rate of about 3 to 4%. You've got 10 trillion today is the demand for working capital, 30 to 120 days, of which roughly about 60% is open account and about 40% is LC today. Okay, but that definitely there's a trend growing in favor of the open account, right? Why? Because industries are consolidating. As buyers get bigger, right, they set the rules of the game, and they don't have to participate in expensive bank programs. That's just the reality of it. Okay, so if you take this, the other statistic to watch is that 5 trillion goes of the 10 trillion is financed in some shape or form, which means 5 trillion goes unfinanced today, right? In India, that is 350 billion. If you look at the IFC report that was done last year, roughly 26 trillion rupees goes unfinanced. Or if at all, it's through shadow banking, right? Where rates start at 22% and then go up to 40% per annum, to Chantal's point earlier, right? And COVID has only made that worse. So you need, Chantal also made a very good point about risk, which I want to talk about. So what's happened is that in the post-COVID era, a lot of factoring and receivable finance programs have melted down. That's just the reality of it. Why? Because buyers themselves don't know when they're going to pay, right? So therefore, the only people you can take any decent risk on today is AAA, maybe AA minus anchor buyers, right? Very difficult to take any kind of risk, even if you have insurance on others, right? Look what happened to Greensill, completely unraveled, right? A multi-billion-dollar enterprise unraveled within weeks, right? Why? Risk, and risk due to exposure to steel industry, right? So all I'm saying is that there is an opportunity here, but you need to look at the problem differently. So the problem is this: there is trapped liquidity existing in the system. If you take approved payables, most programs today have sub 15% adoption by anchor buyers of those approved payable finance programs, which means 85% is trapped liquidity sitting in the system. Why? People are just waiting to get paid. You got a lot of cash rich tier ones who don't need the finance. Interest rates have dropped, so they can get alternate finance. So this is a vicious circle, right? Which means they're not participating in programs. If they don't participate in programs, that means the tier 2 and tier 3 don't get any benefit. And 60% of suppliers today fall outside of any program. That's the real opportunity. So what we've done is we've used asset tokenization to do something very simple. Tokenize all of the assets. What needs to be funded at tier 1 level can be funded. Anything else can be pushed down as a closed loop digital credit, right? This touches upon regulation as well. The last thing you want to do today is go and butt your head against a regulatory wall, right? So therefore, it's important to find solutions that work with and around regulation rather than trying to change the regulation. At least in the short term, it's not a reality. So what we've done is we've created a digital credit that uses existing structures such as dynamic discounting and approved payable financing to extend that credit to tier 2, tier 3 and beyond through something very simple, which Pramit talked about, which was a digital wallet. A digital wallet contains a token. I can be a beneficiary of a digital credit. If I'm a tier 2 or tier 3 supplier, I can only do 3 things with it. I can request early payment, I can assign it to my further upstream supplier, or I can wait for due date, right? And so what we've done is we've tried to simplify this whole thing, right? By taking a latent opportunity in the market and ensuring that the grassroots can get access to it.
Right. So thanks, Aditya, I think, for a detailed explanation of what you are doing in this startup. So coming back to Sumit, so what do you think are some of the barriers? I think Pramit and Akshay have talked about barriers to digitization for MSME companies. So what do you think are the barriers to digitization in MSMEs, and what can be done about that?
Okay, great. Thank you. This is really good. From what all the other panelists, my co-panelists have talked about, I would like to just say the adoption of technology by the MSME, what Pramit has also spoken about, everybody else has agreed to it, is the biggest barrier at the moment. And it's not as if they don't know. In an earlier session, gentlemen from Olam also said the same thing, that if you feel you need to have technology, don't wait for next year. Do it today, because the cost in the cost benefit analysis, the amount of money you will make because of digitization this year will far outweigh what you would have made next year. So the barrier is adoption of technology and how exactly to go about it. MSMEs, unfortunately, with everything that is available to them, do not have a huge budget to be able to deploy path-breaking technologies like blockchain. They don't need also. That is one of the bigger things. So what they need is being able to use this. And not themselves also. Their need is more of, okay, is my bank using blockchain? If I'm sending goods from here, from say India to Africa, am I able to send my BL through a blockchain? Would I have to send a physical DHL courier that will go all the way? So these are the kind of things. They themselves don't need to have that kind of technology inside their premises. They need access to it. And it is important that companies which have deployed these kind of technologies find ways in which they can give access to the MSMEs of their technology. The fact that this will increase the amount of trade that can be done and also broaden the customer base for all these companies is something that would help them earn more revenue. So that's where the barriers are, and that's where you can overcome them. Just look at companies like TradeLens. TradeLens is a IBM and Maersk collaboration where they have been able to bring 4 out of the 6 biggest shipping lines, logistics players of the world onto a single blockchain. And that blockchain is today recording 1 million logistics events per day. They have onboarded banks on it. They have got shipping lines, they have got banks, they have got logistics or inland transporters on it. So today, for a normal transaction of import, say like somebody is importing raw cashew nuts from West Africa to India for processing, and a normal transaction is, okay, documents through bank. So that guy would have to actually carry the documents, which includes the original BLs and invoice packing, several other documents, quality documents, go over to the bank, his bank, give it to them and say, okay, now you got to send it by DHL to my buyer's bank in India. Now, I understand that we do not have the capability to see what exactly it is in West Africa. There will be days when DHL is not working. There will be days when the flight is not working. So you have flights twice a week. Simple things like this makes it 15 to 20-day gap before the bank in India gets those documents. And then it will be another 3 or 4 days for them to do their AML review, for them to do a review on, is this bill of lading duplicate or original, and then release the payment, which delays the payment over to the supplier by almost a month. Agro commodities are usually a 6-week harvesting. You get your money after a month, you have lost 2/3 of your season, you cannot deploy it back. So the amount of capital that is needed to do the same amount of turnover goes up. Whereas if you can achieve this with something like TradeLens, which can be done in probably 3 days. So you will need lesser capital. You will be able to deploy your capital more efficiently. You will be able to save a huge amount of interest. And the maximum benefit of such transactions goes to the MSME segment. The exporter from West Africa is not your craft food that they would not need money. They need money to be able to go back to the farmer and buy more commodities. Similarly, there a simple company like Re, which is offering satellite imagery. With satellite imagery and smart contracts, they are offering agro insurance.
Right.
So these kind of companies, if they are able to provide, and Re has got this in their business plan, that they would provide agro insurance at almost zero cost to farmers. They have got their own business plan formulated out. Open Compute Alliance, that has got a Bharat Compute Grid in India, which is going to provide local storage at 1/10 the cost of what is available normally today. So how to bring down the cost of technology for MSME or be able to offer it to them at a zero cost is one of the biggest barriers to digitalization in India, globally, sorry.
Right.
That's what I feel.
No, absolutely. I definitely agree to this point. And I think that's where either some large enterprises or whether some startups who have been able to get access to funds at the right time, they have been taking initiative and not just adopting, but they're also evangelizing many of these individuals and small businesses to be part of the larger team.
Exactly. Yeah.
Especially when you talk about crop insurance, I've been part of one of the weather-based crop insurance solution on blockchain, and we did encoded almost 600 plus policies, and it was completely smart contract based automated claim settlement using data from IoT devices.
Yes.
Yes, absolutely, that has been a very amazing experience. So now I would like to so Chantal, you talked about some of the challenges MSMEs face while dealing with traditional banks, because traditional banks depend more on their credit and risk assessment criteria are still very traditional. So how do you think, how STEN is changing that? So how you are different from banks, or what you are doing different from banks to help the MSMEs?
Yeah. Well, actually, Sumeet gave a perfect introduction to that, because if you're an agri exporter, you don't want to wait 6 weeks for your money, because then your season is over. So that's exactly the reason why companies like Sten are active now. So that's great news for this segment, that the financing market is much bigger than only traditional banks. And I even dare to say that the non-banking financial companies are outperforming the traditional banks at the moment in boosting the economy. I see a couple of things that are important for clients. That Sten is doing better, or other non-banking financial companies are doing better than traditional banks. Most important, the speed of service. That's always an issue with banks. I mean, I don't know, I live here in the Netherlands, which is a developed country, but I also have to wait 3 weeks to open a bank account over here, and not even talking about KYC procedures. It's a mess within the banks, and that's a real pity. So speed of services is critical. And that's talking about bill of ladings earlier by Sumeet. You have to work. You cannot work these days anymore with physical papers. It's so outdated. So uploading a bill of lading and a packing list and a commercial invoice into a platform and financing based on that. Yeah, it sounds so easy, but it is also easy, and that's what we do. So we finance within 48 hours after reviewing these documents. So that's already a lot different than 6 weeks. But on top of that, also the eligibility criteria are different with a non-banking financial company. I already spoke a little about jurisdictions, that traditional banks are sometimes, maybe they want to service, but they cannot service because of the regulations. So they cannot offer local financing for a very small company in India, for example. We have different eligibility criteria. So we look at the country itself. So it doesn't matter if you're small or large. It matters if you can purchase an invoice. So you look at the legal structure of a country. And that's how we do it. So we don't have any restrictions in size of suppliers. So even when you're a startup, or when you're really small, or when you're making a loss, you can still sell your receivables to Sten. Because what we do, we look at the financial strength of the buyer, which is much more important because they have to repay us. So I think that's a big benefit of a non-banking institution. Next to that, I think short lines of communications. What I often hear from clients coming from banks is that they have all these different departments in the banks, and they have a customer service, but it's really difficult to get a response, and especially a fast response. Sten is a really flat organization, and it's a digital platform, so you get your response immediately. I already discussed the minimum paperwork that is related to financing. Going to a bank, giving all your details, all your paperwork to a bank, and then getting all the paperwork back in order to get a financing line is enormous. and it takes again a lot of time. So at Sten we only have 3 documents that you have to sign, and they're most of them are 1 pages. So that's the minimum paperwork is very important, especially for the segment, because these companies, they want to export fruits or they want to export consumer electronics. They are not financing experts, right? So you want to make it as easy as possible for them. And on the top of that, and this is my last point, is we offer an unsecured way of financing, which is a huge benefit. So we focus on the credit worthiness of the buyer, and we do financing in an unsecured way. So if you have your existing banking lines, it's really easy to have a second line of financing with, for example, Stan, not to interfere with your with the pledges of the bank, but still have the ability to get financing, because companies want to spread the risks. They don't want to be depending anymore on one bank, especially now with the COVID situation. So I think that's why I believe the non-banking financial institutions are stronger nowadays than traditional banks.
Right. Thanks for the insights. So just a follow-up question, and I'll open the question to Akshay, Pramit, Aditya. So as we see that NBFCs have great processing, whether it be a speed or quickly providing financing to the customer. And at the same time, we can't forget that banks also have some great strengths. One, legacy of trust, large customer base, which has been there for decades. And of course, the cost of capital is much better with banks as compared to NBFCs. So, like RBI also came with a draft paper and talked about co-lending. So, where do you see co-lending growing as a business where NBFCs and banks can come together, and you get the faster speed of processing from NBFCs at the lesser cost of capital, and bring the legacy of trust? So I think Akshay, you can.
So probably it's a very nice thought actually. This will make life very simpler, but I believe NBFC per se, when we talk about India, I believe there was a certain amount of challenge where what they did, and they fell into the same trap which Chantal was talking about, going to only the large or probably mid corporates, trying to repackage the same financing in a different fashion, taking certain leeways which a bank cannot take. And we know that NBFCs face this problem. So I think the place where NBFCs in India missed the bus, and I'm not talking all the NBFCs, but many NBFCs and many large NBFCs, is that rather making inroads to the bottom of the pyramid in the SME, MSME segment, which can actually give you the proper returns which justifies the position of an NBFC, they missed out on that. And Sumeet put it so well that the biggest roadblock is internet connectivity and taking the technology over there. When I said, and Pramit suggested, that 60%, and it's a KPMG and Google assessment about a year back, when they say 60% of people are not using the strength of internet. It's not that they are not connected on mobility, probably, but they are not utilizing the strength of internet. The more connected they are, probably that will open the doors. And rather NBFC doing a co-brand, and I'm just giving my views as an insurer because I interact with banks and NBFCs, rather doing the same thing what banks are doing, and we also know that banks have failed to reach the end, the smallest of the SMEs. They should rather take the technology with them, give them a platform where they can utilize that technology of blockchain, and this will give you the requisite data, rather doing a co-broking with banking, because then there will be just another bank probably. Okay, see what today as an underwriter or as a broker, what I look at, and when I take the proposal, like we get different type of proposals. The challenge is quality of documents. See, in credit insurance, how many times, most of the claims, or 60%, 70% of the claims are of protracted default, of which we see a good amount of claim getting rejected. And if I say I've got 100 claims rejected, 50 would be because of some dispute owing to wrong documentation. So the core is that, and see, if you are a very big buyer of insurance, probably you can make your way through the insurance company. The problem is those smaller buyers, and that is where we need to take the support. See, today, even if I talk about NBFCs, globally, NBFCs are doing business on the strength of insurance, and insurance takes comfort from clarity of documentation, clarity of assessment, and that is what is missing. So I'm fully sold out on this idea that more we take technology to the bottom of this pyramid, better it would be. And I'm fully sold to this concept that, and I believe in it, that even a smallest entrepreneur based out of say Banaskantha and Gujarat selling honey is equally smarter than anybody selling sitting in say maker chambers. They know how to make money. They know what their documentation is. It is only about somebody giving them a link. Okay, this will pull you in. Means we serve or we interact with people like Zomato. What they have done, they have just made those cloud kitchens. They have people who had certain culinary experience. They have given them a platform who could not open a restaurant. And even, and I know many such entrepreneurs who are very small, hobby chefs, and they are doing good businesses now. So consider these hobby chefs as small SMEs or MSMEs. Somebody giving them, and I think that's what Pramit was trying to say, somebody giving them access to the technology, and then everything falls in place. But that's what I think or I believe from my perspective.
Yeah, Pramit or Aditya, anything you would like to add?
Sure. Yeah, I really echo Akshay's point on technology and access, right? Which is that at the end of the day, as much as technology needs to improve access, technology also needs to be able to create new business models. So, with specific to supply chain, right? There's a tried and tested business model which has not been applied to SMEs. What is that? That's securitization. Okay. So what happens in securitization? It provides a vehicle to solve some of the problems that Akshay had outlined, right? So you talked about commingling. So how does a bank and NBFC participate? How does a insurance asset manager participate? How do private wealth managers participate? How do retail individuals who are looking for a short-term AAA deposit product? Today, there's a scarce that will generate an interest more than 4 to 5% in India, right? Participate. Whereas the SME is willing to be financed, his opportunity cost of funding is anywhere from 12 to 36%. So there is a natural interest rate arbitrage gap here, where you can get in, use securitization, have multiple investors come in with multiple tranches, different risk appetites. Insurers can come in and play the credit enhancement game to create a security that is AAA or BBB rated in the market. And that's a very logical way where technology can come together to bring the participants together to create deep tier supply chain finance. So there is, as much as you have access, you also need the means, right? And so I just wanted to point out that these are some of the things that we're working on, is how once you have tokenization, you have at least provenance of the underlying goods and services. And that's what blockchain brings to the table. Once you have provenance, you have efficiency in packaging these assets and making them available on a revolving basis to provide the cover required for doing complex transactions such as securitization. And securitization then solves the other problem, which is how do you bring banks, NBFCs, and other investors together?
I think that's a very interesting point. I 100% agree to this. I've did a paper 3 years back on syndication using blockchain, and
Yeah.
I understand. Securitization will be revolutionized using blockchain because once you have a complete credibility on the portfolio, that portfolio can be fractionalized, it can be broken into, it can be, and various different kind of investors can participate in it with different costs of capital, with different risk appetite. And that I think will help in creating a middle market. I would call it a middle market where rather than, getting financing at 8 to 10% from bank, or 16 to 20% from NBFC, something a middle market like 12 to 13%.
Correct. Exactly.
That can be created. Right. Yeah, Pramit, you're on mute.
Sorry, thanks. I was actually itching to speak on this topic. Pretty strong views here when you said co-lending and working with banks. So see, if you look at it, the short circuiting of taking SME originated receivable assets directly to capital markets was more, the genesis was 2008 global crisis, when actually the Basel regulations pushed the banks that any unrated asset is going to give you 150% provisioning and more, and that's where all the SME receivables started falling off radar for banks, and then it in a way pushed a lot of direct capital market or securitization of these receivable assets, and that's exactly what most of the factoring companies are doing, accessing capital markets directly rather than only relying upon banks to do this. And that in a way has been a great movement, and technology now is helping it further. And going and working with banks as a non-bank and asking them to co-lend in an assets is I feel more like you're asking Tendulkar to go and play kabaddi. Working with MSMEs is something you have to do it on the ground, you have to go dirty, you have to go and get it right. And if you actually try doing that, my view is it's not going to scale enough. The FLDG structure is something which comes into play, where ultimately you are pumping in venture capital as a startup, as an NBFC, to give the cream out to the bank where you've done all the hard work. More of a business correspondent model or a securitization model is a better way, where you choose and entirely pass on the risk, rather than again differentiate and play the same sport which a bank is good at and which is not going to help the user market ultimately.
No, absolutely. I think you are absolutely right. When I was working with Biz2Credit earlier, the whole philosophy was that we would not be passing on leads to the banks. We would be just passing on the opportunity to the banks. Simple application, while the customer connect and everything to do with customer will be handled by us. At the end of the day, it's the customer that's more important, right? There's a lifetime value of the customer. So absolutely.
I would just like to add a few lines over here. See, from what we know, the banks basically have a one-sided relationship. Their relationship is with their client, the buyer, the seller, whoever that person is or company is. And that is where the problem is. Today, with global trade being so multifaceted, it is impossible for a bank to take calls on what exactly their client is telling them about their business. So when you have a blockchain-based platform where you have got everybody in the entire supply chain onboarded and ready to provide information, that is when it becomes far easier for everybody and anybody to take calls on what exactly is right and what is not. So if you have a blockchain-based system where you have banks, you have got all the suppliers, borrowers, all the suppliers, buyers, all the intermediaries in the supply chain onboarded onto the same platform, then when a shipper is issuing a BL, the bank knows that this is the right BL. When the buyer is signing a contract, the bank knows that, okay, this guy is going to get paid for that contract. That is what technology can offer. So yes, banks and NBFCs coming together, all that is good, but finally it is the whole picture that will make the difference, which is what blockchain and technology can bring into place.
Right. So I think we are coming nearing the end of the session. So I think for the benefit of the attendees, we have talked about various use cases as far as blockchain is concerned. We have talked about contract management. We have talked about provenance of the actual supply chain when the asset is tokenized, and we have talked about documentation, how documentation can be stringent, how the proof of provenance is there for, and traceability is there for the documents. I'm open house to the question, open question to the house. Some specific use cases how AI is helping trade finance.
I'll be happy to take one shot at it. So let's take a very specific gap in the market today, right? You've got commodities exchanges, typically let's say NCDEX in India, trading in about 16 different grains, right? Where's the gap? I think Sumeet and others, you touched upon the fact that there is the opportunity for blockchain to help in some of the commodity trading areas, but the big gap actually is on pre-shipment finance. How do you finance the farmers who will deliver on what's being on the future contract? If I'm doing 1 million tons of coffee future 60 days, who's going to fund the farmer, right? It's not so much funding Unilever, it's about funding the farmer, right? So there is an opportunity here, and the opportunity is to use AI, using better provenance and information, which you touched about earlier, crop, weather, other data, to actually create an AI model to provide pre-shipment information for farmers delivering on futures commodity trades, where the exchange acts as the final settlement party along with the banks who participate in the exchange. So this is the big missed opportunity today, is to provide that last mile financing on a pre-shipment basis to people who actually deliver on commodities.
Very interesting. Anybody?
I would like to just add over here. Yes, Aditya, you are right. But the problem is, apart from the farmer, because the farmer is not the shipper. In more than 90% or 95% of the cases, farmer is not the shipper. So the last mile financing is being done by MSMEs who are present down and dirty, as Pramit mentioned, in the field. Those are the guys who are actually taking the risk of financing the farmers. I would like to just point out on another fact that was highlighted in a report by HSBC. HSBC concluded their blockchain letter of credit transaction within 24 hours some time back, and their study was that a processor of a letter of credit documentation spends 25% of a 10-day period on just the AML review, which is very easy for AI to do. And AI will be able to point it out with the help of machine learning, natural language processing, so many other things, discerning patterns. They'll be able to probably give the answer to you within 24 hours or immediately. So that's one place where AI can easily be used.
I think that's a very valid and very interesting point. In fact, whole documentation, creating the documentation, reading the documentation, finding out errors or some of the misspells or some logical errors. AI is doing. There are a lot of startups who are working, especially on the documentation piece itself.
True.
Ravi, maybe to add.
Anything you would like to add?
Yeah, maybe to add. Don't forget the business owner himself or herself. Because what I see is that many of the business owners of this segment don't have any overview of what is really going on in their company. So talking about AI and how it will help a financier to access, to give finance to the company or help in a letter of credit business. Yeah, absolutely right. But I think it also gives basic information to the business owner itself to help them build a case for a financier. Because I see too many companies, business owners, still not knowing about their cash flow, not knowing about when their buyers are paying them, about what they need in the peak season, whatsoever. So it also provides them a dashboard, an insight in their own company to build a case for external use and hopefully the financing markets.
Absolutely. I think something like a cash management dashboard, which gives them details about and some about whether how the receivables looks like or how the cash flow looks like 1 month or 2 months later.
Exactly.
Absolutely. So now I think just to summarize, so we talked about how COVID has been a big catalyst for helping MSME change their mindsets to increase adoption of technology within them. At the same time, there are a lot of financiers, investors, startups, fintechs who have been doing a lot of efforts to bring digital access or technology access to the MSME segment. And I think combining these two, we are already seeing a huge amount of changes which are happening, especially in the trade finance segment and especially for MSME segment. We also talked about a variety of use cases, focusing mainly on two emerging technologies, blockchain and AI. And as Sumeet and Pramit and Aditya, everyone talked about some of the startups who have done credible work, and at the same time, some of the use cases which have actually are in production, and millions of transactions are happening. And I think the way I see it, I've been into blockchain for more than 5 years now, and 2021 I see as a major breakthrough, because now people are actually talking about production systems. People are actually talking about, they're serious about blockchain adoption, and there's a huge change from POCs and pilot mindset of 2017-18. So things have changed dramatically, and I can say that from India itself, we are going to see at least 20 to 30 another big production systems or consortiums coming up. That's going to change, and especially most of them are focused on financial services, followed by supply chain and some other spaces like power and media and telecom. So these were my summary of the discussion. Anyone can would like to add anything as a closing comment?
No, Ruz, I'll just take one quick comment there. Wonderful being on the panel, and I hope that the discussion among all of us continues beyond this session. Dheeraj, thank you so much for hosting us.
Thank you, everyone. Thanks a lot. Thanks a lot, Chantal. Thanks a lot, Pramit, Aditya, Sumeet, Ravi, and Akshay for wonderful session. I think all of the comments are coming from the participants is great, and numbers shows that how many people are interested for this this session. More than near about 5,000 people are already attending. So thank you all the participants over here and this from this platform for your this participation. Thank you all the panelists. Thank you.
Thank you. Thank you,
Thank you
guys.
so much. Thank you, everybody.
Thank you.